Hi, I'm Pattu from freefincal. Let's take a look at ICICI Securities' new product called the ETF Intelligent Portfolios or EIP. Let's find out how it's different from small case and naturally whether it's worthy of consideration. So, before that, thank you for the wonderful response to the goal-based portfolio management lecture series. Uh, like you may know by now, it's the lectures are hosted on a Facebook group. So far, there are 443 members who have signed up. Another 30-40 have paid but have not yet joined. And I hope there will be some more joining. As you may know, there is an early bird discount going on. If you sign up before 11:45 p.m. Coming Sunday, the price will be 1,030 rupees, but after that the price will be hiked up to 2,570 rupees. So you get a 60% or more off if you join in the early bird window. If you want to know what's going to be covered in the course and what's the syllabus, you have about a little more than 2 hours of content. There are 10 lectures. What is goal-based portfolio management? What is the sequence of return? Why is it important? Managing risk for a 20-year goal. We talk about examples, why we need to look beyond Indian stock market history, how different equity allocations work for 20-year goals, 10-year goals, 5-year goals, etc. What if I started investing late and have a huge fixed income? Is the strategy we discussed so far practical? Basics of retirement planning, testing retirement strategies with the worst sequence of returns, and testing and then the full details, risk management, etc. for the retirement strategies, different strategies, and so on. And finally, the takeaways. So that will be the first module. The first module is ready. You can start viewing right away, and rest of the members are actually on it. Other modules I'll try and do. My goal is to share more modules, content that only advanced or intelligent DIY investors will perceive, will appreciate and understand. More modules will be available. This fee, the fee that you're going to pay, is a one-time fee. It's not a recurring fee. And once you pay, you and get into the Facebook group, you can access the video any number of times. There's no problem with it. But please remember that when you pay, people are just clicking on join the Facebook group and not even looking at the answer box that comes, and they don't even bother to answer. I mean, you have to provide proof of purchase. You have to provide the email you use for purchase, the phone number, or the payment ID. If you don't provide the proof of purchase, I will simply decline your membership until you do. And you don't purchase it again. You just need to rejoin the group and provide that information. Please do that. Also, please understand how to make the purchase and what are the FAQs of the group. All the links are available. I'll share it below. Thank you for the support, and please do enroll if you are interested. So let's get to this intelligent portfolio product. This is just a basket of 4 ETFs, and this is pretty much identical to small case but with some important differences. So they have 4 ETFs, and the ETFs are ICICI Nifty ETF, Nippon India Nifty Mid Cap 150, Nippon India Long Term Gilt, and ICICI Prudential Gold ETF. And there are 3 options available: conservative, moderate, and aggressive. The conservative will have 30% large cap, no mid cap, 65% gilts, and 5% gold. Moderate, 40% large cap, 10% mid cap, 45% gilts, and 5% gold. And aggressive, 50% large cap, 20% mid cap, 25% gilts, and 5% gold. And the problem is the charges. There is in addition to the expense ratio of the ETFs, there is a 0.5% per quarter charge on the average assets under management. So it depends. If you have 1,000 rupees, it's 0.5% per quarter on that. If you have 10 lakhs, it's 0.5% on that, and so on. Plus there is a GST on that. There is no brokerage for buying, and there's no brokerage for rebalancing as per the logic given in the plan. I'll explain that. But if you try and change the asset allocation yourself, you have to pay for the brokerage. And minimum is 1,000 rupees. You can invest in SIP or lump sum. The big difference is small case is a basket of stocks. Some baskets are stocks, some baskets are ETFs. Most small cases are rebalanced only once a quarter or twice a year, once in 6 months, and so on. But this EIP product will be monitored daily, and every time there is a deviation of 2.5% in the asset value of any of the ETFs, there will be a rebalancing triggered. If there is a 250 rupees deviation in value also, they will trigger the rebalance. And each time this is triggered, you have to pay tax as per slab, so the taxation is also not factored in, so that's also an additional expense. They have shown some data. They have not compared it with Nifty and other things. That's a little suspect. I'm a little worried about that. But they've shown that the aggressive portfolio, they have rebalanced 13 times, almost twice a year, between January 2011 and June 2019. Moderate portfolio, they have rebalanced it 16 times, and conservative portfolio about 12 times. So you have to pay for those expenses. So I think it's a little too much in terms of tactical asset allocation, I think. So the Zerodha, there are some products in Zerodha which use tactical asset allocation, but most baskets, they use only systematic asset allocation, whereas this EIP is only tactical asset allocation. And the costs, Zerodha has got only flat fees for rebalancing and buying and selling. Depending on the baskets, the fees will vary, but they're all only flat fees plus GST. But there is no transaction fees as per the model of the portfolio, but there is a AUM fee of 0.15% per quarter. So annually that will be a little more higher. So you have to you can invest in EIP if you want to via ICICI Direct, but my suggestion is stay away from all these products. Of course, there is a advantage of low cost, autopilot, ETF, and so on, but the tax is there. I think they are rebalancing once too much, once too many times. I think a better option would be ICICI multi-asset fund, which is suitable for newbies as well as for conservative investors. That's a much better product. The direct plan will have low expense ratio. There's no tax incidence on rebalancing. There's no brokerage to worry about. That is also on autopilot. That's a much better choice than this. I've just mentioned the difference between small case and ETFs I mean small case and this EIP. EIP will be more expensive than small case because it has got a AUM linked expense ratio. So my suggestion is stick to mutual funds, balanced advantage, or aggressive hybrid, or multi-asset mutual funds, and stay away from intelligent ETF intelligent portfolio from ICICI. So thank you. Don't forget to register for the course, and I'll catch you later. Bye bye.